All right, you guys, back with another one. Yesterday was my last video explaining this London trade sale buy I got here. So just right before the sale, this buy I caught right here with this execution, and was also explaining the fact that I was predicting and anticipating both the buy from London and the sell from New York, but because New York did not form my entry criteria and just made a massive wick and reversal, I couldn't enter in time to catch the New York trade. So I only got the London yesterday. Yesterday's sell bias was very strong. So if I had caught a New York trade from right here, I would have been able to hold to at least maybe the bottom of Asia for a massive RR. So that was just profit I could not lay my hand on. Today's sell from New York, however, formed our entry criteria, but the sell bias was not as strong. As a matter of fact, today started pretty bullish. Today started as a on a day where I would have really loved to buy and continue holding the buy because of what we did yesterday. So yesterday we typed into relevant price action. So let me quickly go and show you on the chart how exactly it is that I switched buyers mid trade, not mid trade rather, but immediately price reached the price level that a sell system began to be valid. I switched buyers from buy because price had left the buy zone and now got to the sell zone, even though the overall trend was still buy. So I couldn't hold it for as long as I could have held yesterday's trade. So here's the execution, and here's the 1 minute entry on NASDAQ and SM and ES. So let me quickly go to the charts and show you exactly what it was that first of all triggered my interest in the trade. So let me expand here and just talk about purely NASDAQ for a minute to give you the general layout of why I thought why today was extremely bullish and why it wasn't that advisable to hold a sell for long, even though that's what is playing out. So let's go to the weekly time frame. So right here, what we had yesterday, or rather what we had today, was the previous weekly low being swept right here. So this was a sweep that happened yesterday into this region. Even though this region has already been tested before, this was not the only reason why we wanted price to buy from this region. If this was the only reason, we could say, okay, this is a mitigated fair value gap, and that's why the buy is not holding. But when you go to the daily, you then find that today, or rather yesterday, price swept the daily into a region that has not been traded into at all. So you can see that there is a daily fair value gap right here that has not been mitigated at all. As you can see from this side of it, there is a daily fair value gap here that price swept the previous weekly low on its move down into the region yesterday. And so what we are now expected to do is to look for buy structure from price taking previous weekly lows and entering a daily bullish fair value gap. So that those are two extremely strong higher time frame confluences for a buy. So price swept weekly lows and then entered a daily fair value gap. That's an extremely high buy bias. So that was what we were waiting for. And the structure that we used to validate buys from the sweeps of daily and weekly lows, or the taps into daily and weekly fair value gaps, is we look for the 1 hour bullish, or rather bearish. If price is entering into a bullish fair value gap, we look for the 1 hour bearish fair value gap that was traded, that was created while price was coming into that weekly or daily fair value gap or sweeping the weekly or daily low. You look for the 1 hour fair value, a bearish fair value gap that was sweeping into it. And then when price trades above and closes above that 1 hour fair value gap, we also look for price to do either of two things. Number one, while it is trading to close above the fair value gap, it creates a 1 hour and a 15-minute overlapping fair value gap on this price leg up here. So these black candles on the 1 hour going up should create a 1 hour bullish fair value gap that overlaps with this 1 hour bearish fair value gap here. So telling us that even though this was created, market is showing its latest intention as this and it's moving off these levels. So we trust this more. So if a 1 hour bearish, bullish and 15-minute bullish overlapping fair value gap occurs here, we could take a trade directly off it here. But that didn't happen because you can see the wicks interrupted any formation of any 1 hour fair value gap. So that idea is invalidated. And the next thing we look at is when the 1 hour fair value gap is being disrespected right now for price to close above it, will price turn back into it now and then on the way up creates a 1 hour and a 15-minute overlapping fair value gap? So I simply said if price creates it straight up here or retraces into it back and creates it like this, either of the two ways, that's what we are looking for. Or if we then go down, if we cannot find any single 1 hour bearish fair value gap here that is inverse, we then go to the 15 minutes. And on the 15 minutes, this is where what we're looking for happens. On the 15 minutes, this is where what we are looking for happens. Excuse me. All right. On the 15 minutes, we are looking for, again, the same logic we use on the 1 hour. We are looking for price. We are looking for price on the 15 minutes to sweep into, remember this was a sweep of a weekly low, extreme level of liquidity, high time frame, daily fair value gap. We're looking for the 15-minute bearish fair value gap created while price was sweeping into it and taking this liquidity to be inverse, and that happened right here. And then we are looking after this whole leg of inversion. Now on the 15 minutes, we are not looking on this straight leg if price forms any kind of other fair value gaps here. On the 15 minutes, we don't allow it to create straight up. We are looking now for it to go straight up and turn. So if you remember, I gave you two scenarios on the 1 hour. I said on the 1 hour, when price was inverting it straight up, we can look at this leg straight. If there's a 15 minute and a 1 hour overlapping on this leg, we take it. On the 15 minutes, we don't. We look for price on the 15 minutes to go straight up and then reverse, come and find support around this region here. Might not necessarily be up to the 15-minute inverse fair value gap which we have here. It could be somewhere here, but in this case it actually did that. It actually got to the 15-minute inversion fair value gap here at this point here. So price retraced and then formed a 15-minute fair value gap while on its way up. That's what we are looking for on the 15 minutes. So this region here was our prime longing region for today. So remember that what we are doing, if you take it to the high time frame, is that we are trading into this daily time fair value gap here. So context is key. We are trading into this daily fair value gap right here after having swept all these numerous weekly levels right here. All these lows here on the weekly time frame, it shows as low, the bottom, the lows of weekly candles. We swept it into a daily fair value gap, and on the fundamental side, we have things like the SpaceX IPO launching. So people completely believe that right now market is going to seek for a good support system like this and then go long from it. So we should actually, by all indications, be targeting longs from here straight to the all-time highs once more. That is what every trader who wants to make a massive profit will be doing. Unlike yesterday, where traders who want me to make massive profit were believing that price would trade into here and come down. So this move completely gave traders that massive profit and would have given us too if I could find an entry pattern that suits me here, which I did not. So today, back to what we are saying, remember now that the higher time frame structure is now telling us that when we find a buy in New York, since we are very, very close to this region that we are looking for buys from long term, this buy should trigger us into long term holding. So any price action on top here, any price action here that is on the 4 hour and on the 1 hour is simply looking like only short-term pullbacks. We are actually believing that price should go from here based on the higher time frame understanding we just gave to go all the way up. So when this happened, when New York Open happened, let's now go to the 1 minute to observe price action. When New York Open happened right here, I was actually willing to take a buy of this 15-minute fair value gap. In New York, we created another 15-minute fair value gap. I was willing to take a buy of this. And the truth is, if I was trying to be greedy and not following my system, I would have been convinced enough from these buy levels here that price will go up all the way to all-time highs, and I will probably be in for a loss if I was trying to take a trade and hold it just with that should I call it greed. So what then happened was that right here, price did not form my entry system. If you notice, my entry system always requires a sweep, creating a bearish fair value gap. If you are you're thinking of buying, creating a bearish fair value gap, then an inversion of the bearish fair value gap. Right here in this sweep, there was no bearish fair value gap. Price did come up, like if it was inversing something, it did come in to where I would have wanted, and it did go up, and that was indeed a buy into these levels that I would have been targeting to respect my system for about a 2 RR. And that is the same thing that happened right here. If price had given me a sweep creating bearish fair value gap, inversed it, came down into it, I would have taken another buy into these levels for my 2 RR. But since price did not do any of those two, some traders would then stick to their bias and say that they must keep buying because they expect buys from here or here to take you all the way up to all-time highs. But the truth is, since I monitor time frame on the 1 minute and read the intention, the institutional order flow from the 1 minute candles, I am very, very willing to check what 1 minute candles does in response to other relevant price formation, and that's where the ES then comes in. So right here, I was monitoring, even though price seems to have left without me and I couldn't enter the buys that I wanted. So understand that my bias was initially buys. Just understand that I was now monitoring right here when price tapped into, because New York session has the liquidity that can shift the direction of the market at least temporarily in response to interactions with higher time frame valid zones. So this is a 4 hour fair value gap, a higher time frame valid zone, even though I'm expecting buys to take it out and go to all-time highs, but it still remains valid. What I noticed was that when this happened, when this higher time frame valid zone got tapped into, we pulled back. All the while price was going up, we never had an SMT with ES. But the minute this higher time frame time zone got tapped in, price zone, which is the FVG, got tapped into, we pulled back, we swept these highs here. But on ES, so check the time, 3:30. Check this time right here, 3:30. So this move here is this move here, right here, right here. You notice that we swept the high over here, we failed to sweep the high over here. That's a sign of manipulation. That's the sign that at least temporarily institutional order flow is coming into the market. People are trying to move the market a certain way to get a certain result. What could be the possible result? A belief that price is going up in the market, so a bullish market sentiment, signs of manipulation coming in, and then reading our entry signals, we notice that notice what I always say I like to see, while price is coming into the zone like this, while price is buying, so now it's a sell zone, so you are looking for buy structure. So while price is buying into the sell zone, we came down and we inversed that sell, that's the 1 minute bullish fair value gap that was created here. And then when we did that, we retraced again, and then we came down, creating another 1 minute bearish fair value gap right here. So this became our entry point that validated that this zone was not a joke, at least temporarily. But we exited very early at this point right here, because a lot of times, and as a matter of fact, that's what converted my potential win on Monday morning to a loss. Markets will often, when it's engineering this kind of temporary moves, it will often give you the ability to exit right at this level here, but it will not give you this extreme and obvious swing level here. So I learned to take my trades off at these levels like this when I have these kind of bias that is in confluence with a higher time frame strong bias, but it comes with its own clear entry and context by itself, but it is still not confluence, rather I meant in conflict, but it is still in conflict with a higher time frame understanding. So I do not like to be in conflict with the market. That's why I exited at this point. There was no possibility for me to hold this trade for a very, very long risk to reward, because every retracement would have cost me anxiety. If it was the one of yesterday that the higher time frame context was in confluence this time with the New York sell, I would have held it and I would have been able to hold through any retracements. But in a context like this, where the higher time frame context, you can see it clearly from this sweep and everything I explained from the daily was a buy right from this point here, then I cannot hold this for very, very much longer. So that is the reason why I exited it right at this point for a 2% gain. So I hope you guys are having a great day. It was a long video, I know, but the understanding and the way your technical analysis can change in the middle of the day based on what you understand, and how that will give you a perception of how you should target your profits or shorten your targets so that your expectation can support your psychology. The psychology is not about believing you can hold trades regardless of what happens. Psychology is about having the understanding of the expectation of the trade you are taking, so that you can adjust your psychology to match the trades that you are taking, so you can understand when you will be able to hold through a pullback and when you will not be able to hold through a pullback, instead of always stressing your brain and allowing your amygdala to trigger the fear response more than necessary. So you have to really have a lot of self introspection, and a lot of it comes from chart understanding. A lot of it comes from outside work, but a lot of it comes from chart understanding. So that's why I made the video quite long. I want any struggling trader to be able to read this and see that there's a possibility. I am trading this strategy for about 2 months now, and I'm barely in the market for 7 months in total. So there's a possibility for everybody to be able to do it. So I hope you watched to this point. But if you didn't, well, you are not hearing it. So whatever. Have a nice day, guys.